All right. Hey there, CPI Day, Valentine's Day. Christopher Inks with Texas West Capital coming at you live just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 14th of February, 2023. We're here in, just north of Houston, Texas, here on Lake Conroe. Had a bit of rain already this morning. It came down pretty good. If you guys caught me maybe there on Scott Melker's show earlier this morning, I would be surprised if you didn't actually hear that rain coming down. It was pretty intense. But man, it looks like the sun's trying to come out now. How are y'all doing? You guys doing all right? Working hard? Hardly working? Y'all digesting that CPI news? Man, good to see you checking in. Crypto MTS, man, been a while. Pete, good to see you. Svibbo's here. Data, Bamboo, always good to see you guys. So CPI comes in a little bit hotter than expected, right? So overall, it came up, we're looking at 6.2. It came in at 6.5, 6.4. And so it's still coming down from last month. So overall, the deceleration, the cooling continues with CPI. Core CPI came in at 0.4, which is 0.4%, which is what was expected. So no surprise there. Overall, continues to drop, right? Year over year. So, I mean, a little bit of a bump, a little bit stronger than expected, but overall continues to get lower, right? So people are very concerned, my gosh, what's going on? So we had a lot of lead up into this week with traders talking about, or, economists and whatnot talking about how they expect this really hot CPI print. It wasn't really hot, guys. A little bit hotter. I mean, a little bit, more than what was expected, but nothing that should get you like, oh my gosh, things are going crazy. The one area of it, though, that's having a lot of trouble is still services, right? Services sector continues to push hot, right? And so that's the big part of it. But I think other than that, I think overall, food was up a bit this last time, but, we've had issues like with chickens and whatnot, with the eggs, right? Things like that. So, I mean, there's still some issues out there on top of everything that came in with that big supply chain issue, whatever, that they're starting to iron out now. So, I mean, I think we continue to see it pulling back. And, I mean, overall, the economy, is pretty, I mean, all right at the moment, right? I mean, if you look at all the earnings there, last month, looking good. You've got CPI continuing to cool. You've got employment overall continuing to pull. Now it had a surprise pop last month, right? Or this previous month, yeah. But overall continues, on its it continues to be hot, right? So I say hot. What am I trying to say here? So unemployment continues to be really low, right? Unemployment does. But that's tempered by the wages still coming down, right? The wages surprising to the downside, right? So yeah, we've got more people, supposedly with jobs now and looking, but we're also getting lower wages. The wages are declining, right? And so that's really kind of the important thing that the Fed looks at. What are those wages looking at? Because if the wages are coming down, then that means less money is being offered, right? Which is a sign that everything's kind of coming down, right? And so the Fed's just concerned how much money is out there chasing the same products, right? Because that's what causes prices to increase, right? And so if you see the wages are coming down, then that means less money, looking forward, is going to be available to chase after these same products, which again then helps bring prices down. So I mean, there's nothing going on right now. I mean, everybody out there, I think the bias is what it is, and people are having trouble letting go of that. I think that's kind of where we're at right now, guys. So, we continue to watch it, right? And I mean, again, if you're a trader, why are you even paying attention? Why are you even paying? Every time we get these releases, what you're getting is just a quick knee-jerk reaction and then continuation of what was already happening, right? So in this case, we've been rallying. We got a quick pullback this morning, like saying Bitcoin and whatever. And, now it's trying to continue to rally now. So, I mean, I think a lot of what's going on with people and their analysis of markets and what their expectations are is all just bias right now, really. They're trying to find something to support their bias which has been, you've had this year-long push lower, right? And so they feel like they have to keep going lower. Remember, everybody herds, guys. Everybody herds. Even your big players, right? At different times. And so, they're trying to find a reason why the economy has to keep looking terrible. But, really, the numbers aren't giving them that right now, guys. So we continue doing what we're doing. We continue looking for things to go as they're going to go, right? I think that's where we're at right now, guys. What's up, Dan? Good to see you, man. It was funny what you give about the CPI. Hey there, Frank. Good to see you. Martin as well. Who else is here? Excelsior. Good to see you, man. Nevlusian's here. Let's see here. That's Diego there with the blue on blue. It's always real difficult to read. Andrew, what's up, man? Yeah, man. Everybody herds. That's the quote, man. I'm telling you, guy. Train crypto. Yeah, it's been a while. Good to see you. But it is, guys. It's one thing you get to learn is everybody herds, right? And even your money managers. That's why they're all like putting money in at the same time. We're all pulling money out at the same time, Economists tend to herd, And so herding is good. Herding's fine when the trend is going, right? But when at those areas where the trend kind of turns, herding's a really, really bad thing. And it becomes really difficult to kind of move beyond that. So I think that, they're still kind of dealing with that. I mean, you got people, guys, some of the stuff has rallied 50, 60, 100, 200%, depending on what market you're looking at, right? And people are still saying lower, lower, lower. Well, I mean, yeah, it may go lower, but you're an idiot for not buying, right? I mean, at some point, you got to say, what are you doing? Because at this point now, you've been calling for lower, lower, lower so long now that at this point, if it does go low, okay, fine, but you can't claim, oh, look, I was right. You've been calling lower since the lows. You've been calling lower since 100% ago, 50% ago. Consistently, week after week. Don't sit there and start patting yourself on the back now, right? If it were to, right? You guys get what I'm saying there. Eric Quinn, what's up, man? Oh, I appreciate it. Thank you. Yeah, still working on getting things together in here. But definitely is nice to be back in the office for sure. Loss aversion bias. Yes, exactly. Ilya, what's up? Says Twitter was crazy this week. Everyone's salty. Yeah, they are. And it is what it is. My suggestion, don't be like everybody else. Don't be a jerk about it, right? I see a lot of people on there, because you're going to be wrong at some point. And if you're a jerk to everybody else, then when you're wrong, they're going to be a jerk to you. And that's no fun, right? But as you guys know, I was recently blocked by a perma bear, right? And not that I was overly rude or anything. I don't think I was. I wasn't trying to be. But I was pointing out, this is getting ridiculous. You keep calling these patterns that aren't actually the patterns you're saying they are. And my point out there to kind of point it out so new people that are following, because they had a lot of followers, would start taking, not take it as what's going on. They look for second opinions. But, anybody can get out and they can say what they want. Sure, you can. But if you tell me, oh, they can say what they can, leave them alone. Well, what? I can't say what I can? It doesn't make any sense. And most people aren't going to listen anyway. But for those of you that do listen, that do pay attention, and you get a second, you don't have to believe me that it isn't exactly what it is, okay? Or that that they're wrong. You don't have to believe me. You just have to go, okay, well, I'm going to get a second opinion at least. Especially if you don't know what you're doing, guys, okay? I've been telling you guys from day one, if you're following me, don't blindly follow me. Don't blindly just buy and sell, because you don't understand everything that's going into my thought process, right? I try to lay it out here quite a bit, but not always possible, right? Just ask questions. If they can't explain it, run, Fibbo says. Fibbo says. Some people have their own pattern recognition. It's called cherry picking for their own narrative. Yeah, it does happen, guys. And it's quite strong. Especially if, remember, everybody's an expert in a bull market. Everybody's an expert in a bear market, right? All that means is it's easy to call higher highs and lower lows, right? But if you can't acknowledge when a bottom may be forming, then you're probably not the expert you think you are. And that's not being rude to you. That's saying, listen, you need to recognize this. Otherwise, you're blowing smoke up your own rear end. And, again, as I always say, would you rather be right or would you rather be profitable? If you guys say you'd rather be right, then get out of the market. I'd rather be profitable all day long. Because trying to be right all day long is going to end up losing you a lot of money. And the goal is not to lose a lot of money in the market, right? Is that Texan cornhole in the background? It is. Yes, Texas Tech. I got a custom-made set there for sure. Cornhole's a good game, guys, right? What's up, Mark? Teresa, good to see you. Says, yeah, be kinder than you think you need to be, eh? Yeah, for sure. So anyway, guys, yeah. Hey, listen, you can join us still here at howtotradetowin.com/LMT. That'll get you in our mentor program. I've got 2 versions of one of my day trading systems out there that our members our mentors have been able to learn and apply quite regularly, doing really well with that. You can also join us here at howtotradetowin.com/T3. This is actually the last week, guys. So you can get our tier 3, usually $200 a month. You can get 1 month for $19.99. No auto renew, no worry about your credit card being charged again, anything like that. We accept crypto, well, we accept Bitcoin, or, PayPal or credit cards, whatever. But man, oh man, jump in there, do it. And like I said, man, we got so much education stuff in there. I mean, you got to be willing to do the work, right? There's so much for you to learn in there. The worst you can do if you actually apply yourself during the month is learn the basics, right? Learn the basics well. And that way, if you decide to not stay with us and you go on, that's fine. But at least you have a good base to start from, right? It's not like most of that information out there that you're going to get, which is half-truths and some are outright lies, right? This is legit. This is, how things are. And if you can get that base, if you can get that foundation, guys, it'll make it a lot easier for you to learn if you choose to continue to learn on your own. So there is that anyway. But don't, if you're just going to come in and not even really put any effort for it, I would say don't even do it. It's only $19.99, but still, don't waste your money. Got to be willing to do it, guys, right? Excuse me. So where are we at? We'll look at the DXY here first, right? Excuse me. So this is what we've kind of got here. We've got the lower high so far on the weekly here, right? Last week had the high. This week has lower high so far. Still below the weekly pivot. Huge kind of wick in here. I think if we're breaking out above the pivot here, I think we might rally up here maybe toward this 105 area. But I think as long as we're staying below this kind of this swing high here at 105.631, as long as we're below that, I think, default, you should be looking lower. Maybe we get like a peak out and then a move back in again, kind of like what we had here. But that's a pretty big rejection right there on that weekly. Daily, there we go on the daily, guys. So, well oversold here. Almost topped out again in Stochastic RSI. RSI is just bullish, just on the bullish side of neutral here. You can see that we do have the lower low print today, coming off that CPI. For now, the daily is still holding as support for now, but you do, again, have the lower low that printed today versus the low over here last Thursday. So you want to pay attention to that. Let me see here. Oops, the 4 hour. There we go. Again, just a small print below here. If I'm looking at this, I'm thinking we maybe have like a 1 and then an A and a B and a C here. So like a flat for a 2. And then maybe, a 1 and a 2 printing here. So you get basically a 1, 2 as a flat and then 1, 2 here. And if that's going to be a 1, 2, 1, 2, then 3 down should be pretty intense. And it should be, because all this inefficiency here, these big large candles, boom, should follow right down through them pretty easily. So I'm, overall still looking for lower here. That 1 hour just bounced off the top of oversold there. Topped out and overbought, I mean. It's curled back down, trying to cross bearishly up there and overbought. Getting rejected right there at the hourly pivot. So again, if we do see that drop down below the swing low here, which is what I expect, the 102.586, we should see it continue lower. And this is important because, again, if the DXY, if the dollar continues to drop down lower, it takes that downward pressure price off of risk assets denominated in dollars, of course, right? My count on the daily time frame is 4. We finished. I believe we finished wave 4 on the pullback, off the low, off that 15,000 and change low. So we're 3 up, 4th on the pullback. 5 should continue up Yeah. So up there toward the 25,000 and some change there, I believe is where we're at, right? Let me see here. Where's my other chart? Yeah, see? 3 up here, flat for a 4. 5 up here, around 25,971. That's the daily R1 pivot. So we should get up to that. That'll give us 1, and then 2 pulling back down toward these lows here. So yeah, that's what I've got coming off there. See that? 1, 2, 3, 4. By the way, that pullback on 4 there is almost 38 too. That's what we would normally expect. Finding support around the pivot. So generically, you know, I had specific levels. You know, I was looking at, if we broke down below 22.2, I was looking at 21.2, which was just the daily pivot here. And then I kind of gave our members this orange range here, which was 21.2 to 21.4. What was that? 21.425. As you can see, we dipped into that. We're taking off here. So we're right here at the hourly pivot. We want to see an impulsive breakout above that. If we can get that, that'll suggest that wave 4 is complete. Breaking out above wave B up here at on Coinbase, it's 24,262 and 18 cents. Breaking out above that will add confidence to the count. And like I said, wave 5 then has that minimum expected target around 25,971 right now based on the height of wave 4 here. You'll also notice it's right around the daily pivot. It's just prior to this the supply structure EQ, which is right around 26.5. So if we continue going through that, that would be the next area I'd look for a target. Yeah. Fibbo says 25.8 is his fib target. So it's pretty close right there to that 25,971 kind of area. Yeah. He says 21.4 was his buy too, so so close on calls, and a completely different way of looking at it. Exactly. Yeah. So, you know, Fibbo has his system that he uses based on fibs, using fibs a certain way, and he tends to get pretty much the same targets that I'm looking at when I'm using Elliott Wave and Wyckoff and whatnot. So yeah, I mean, you know, I like that confluence of targets. So, you know, again, I think we continue heading higher here. You know, only thing changes is if we drop below the swing low here. Ultimately, we want to see the daily pivot hold this support. Ultimately, that's what we want. As long as it continues to hold its support, we should look higher. Let me see here. Let me kind of catch here. If Bitcoin reaches 25,000, how high do you see the SPX going? Oh, Lord have mercy. And what is your bias? Is this 5 waves from 15.4K from the start or into some? It's from the start. The bottom would be wave 4, the larger wave 4, right? And so this is all the first 5 waves of wave 5 heading up. You know, this is wave 3 and 4 of, you know, the first really large wave 5 that'll get you to new all-time highs. So we still got 5 here that gets, you know, 3, 4, 5. That'll be then 1 will bring us 2. Then we'll head 3 higher, continuing up like that. Yeah. What's going on, Esteban? Good to see you. So let's see. So S&P, let me see here. You actually asked about the SPX, right? Let me pull up that chart. I haven't looked at that one in a while. Let's see where we're at with that. Yeah, so we were looking at the possibility back in November that, you know, if you thought this had to go down lower, we were looking at this as an ending diagonal. But that obviously is not here. So again, 1, 2, 3, 4, 5. A, B, 1, 2, 3, 4, 5. It's the same count, this A, B, C, that I'm looking for. The S&P, of course, NASDAQ, the Dow. Everybody, the Dow, the Dow is broken out above this mid-August swing high here. Locks in the 3 waves down as corrective. So the S&P is getting close to that, and then the NASDAQ should get close to it as well. We're getting a breakout above the weekly pivot, which for me is bullish. So, you know, at least for this here, we got 1, 2, 3, 4, 5. And this looks like 1, 2, 3, 4, maybe 5 here, maybe. Yeah, so it could be like a 1, 2, 1, 2 potentially here. If we can break this, out of 43.25 and 0.28 right here, that'll lock this in as 1, 2, 3, 4, 5 as A, B, 1, 2, 3, 4, 5. You guys see that, right? So you've got basically this leading diagonal as wave A. right? Let me kind of get this here. So yeah, so you kind of get this in and you go, okay, well, I've got 1, 2, 3, 4, 5. And so you've got this throw under right here, boom, comes back up, right? Let me kind of get this best as possible here. Guys, it drives me nuts sometimes. All right. So if we do that, and then we go, okay, well, then we've got another 1, 2, 3, 4, 5, right? So I'm looking at this right now as likely an ABC right here, okay? And like I said, this is pretty much all the indexes here, right? Like I said, the Dow, the NASDAQ, S&P, stuff like that, right? So what do we need? Well, what we need is we need a breakout above this wave B here to confirm this, okay? Now, it's still possible. This could be like a 1, 2, 1, 2. But we're coming up pretty high here, right? So if we look here, we go 1, 2, 3, 4, 5. And we go 1, 2, 3, 4. Looks like 5 here. So yeah, unless this is overextending here, right? But let's see. If this is 1, 2 right here, that gets us 3 up here at 478 or 47, 48, and 49. And then a 5 up here around 49.80, right? If this is 1, 2. If this is 1, 2, 1, 2, it could get us up there quite a bit further, right? Probably pull back to this area. It gets us a little bit further. It gets that 2.0 there a little bit, yeah. So, it kind of just depends. Let me kind of zoom in a little bit here. Daily, there we go. So if we look here, we go 1, 2, we go 1, 2, 3, 4, 5. So 1, 2, 3, 4. 1, 2, 3, 4, 5, maybe. Wave 3 can't be the longest or the shortest here. It's shorter than that wave 1. It's shorter than that wave 5. So it's possible maybe we got a 1, 2, and then a 1, 2, 3, 4, 5. Give us a 3, 4, and a 5 still to go. So we can still see the subdividing heading higher up here. We do have a bullish cross down here as the Stochastic RSI is attempting to break out of there on the daily. So I can see this overextension here, the subdividing heading up higher on that. What's up, Deadly? Good to see you, man. Ahmet says, I think Bitcoin almost completed an expanded flat. This 5 waves will be the end of something, or it will use the connector to create a larger connector. But eventually we hit the 5 to 6K zone. I mean, we could, but, again, with the rally off of the lows, I mean, you would have to be looking, if that's what you're thinking, I guess we can probably just look right here at the BLX here, right? All right. So this is basically, if you're looking for analogs, right? I mean, this is kind of the same period here that we had over here, right? In terms of what's going on there, right? Wave 1 up, wave 2 back, wave 3, 4, 5, I'm going up there, right? And so it's the same thing here, But here's the thing. So this is going to be 1, 2, 3, 4, 5, right? Now, expanded flat, if you're looking at this here, right, is ABC, ABC, then 1, 2, 3, 4, 5. That would have to be what you'd be looking at, right? And so that's what that would have to be right there. This is really kind of cruddy counting here. I'll be honest about that. But I can get a 5 count out of this. I've shown you guys that before. We can get a 5 count out of this. So the key is going to be, okay, we get 1, 2, we get 3, 4, we get 5. Should target this pivot area. So right below that is that 25 target. A little bit up there into the pivot will get you 26.5, which is the EQ of that supply structure I gave you. So the thing is going to be, you're going to look, okay, 5 waves up. See, here's the great thing, guys. Whether you think the bottom is in or you think, like, who is that? Ahmet was saying that maybe we've got a flat correction going on here. you don't have to know which one is correct right now to make money. You see what I'm saying? In both of them, you would have a breakout higher to give you 5 waves up. So you should still be looking for that long up toward that. Then the question becomes, do you get 3 waves back and then 5 more waves higher? Because if you get 3 waves back and then you break out higher again, then this is not a flat correction, right? And so what does that mean? Well, it means, and here's the other thing to think about. If you're looking at pivots and you get an impulsive breakout above that weekly pivot, so let's say you get 5 waves up to the pivot, you pull back 3 waves around where we are right now, which is the daily pivot, and then you break out impulsively for a wave 3 here, right? I mean, if you're doing that, you shouldn't be thinking lower at that point. If you're breaking out impulsively above that weekly pivot, that all but cements the idea that the low is in. If you're doing that, let me see, 25, yeah, about that there. We'll get that there. You get basically 5 waves up to around 42,200. 1, 2, 3 to the R1, 4 on the pullback, 5 up here, right? Which then gives you, again, wave 1 up there toward that 42,000 area. Wave 2 back to this 28.9 or the pivot area right here, right? Probably around that 28.9 area. So you'll have, again, 1, 2, 3, 4, 5 gives us 1, 2, 3, 4, 5. And then that gives us 1, 2. And then we look for that breakout higher, right? So, I mean, if we weren't get to any, and we can overextend on the way up there, but if we weren't to overextend, just hit the exact targets we're looking at usually. I mean, that gives you 5 up there at around 82,335. 5 waves up off that. So, I mean, again, now a lot of stuff's probably going to change before that ever happens. But, I mean, that's kind of what you're looking at, guys. Whether you think it's got to go lower because this is a flat, or you think the bottom's in, it's going up higher. In either case, you're looking to rally up toward that 25, almost 26,000 level. See what I'm saying? Yeah, Ahmet, that's what you're looking at? Yeah. Because this count right here, Ahmet may be right. This count, it just sucks right here. This is really kind of a cruddy count. But like I said, we did show that we can get 5 out of this. So now we just need to see, okay, we get 5 up here. Do we get 3 back and then break out higher? Because if we do, you shouldn't even be thinking short anymore. You should be thinking long at that point. So, yeah, I mean, that's kind of where we're at overall, right? Everybody's given a lot of thought to to this death cross here, the 50 and the 200, but I'll be honest with you guys, I'm not a big fan of death crosses and golden crosses. I've talked about it multiple times before, but at the end of the day, again, we've already dropped down from this all-time high up here. We already lost almost 78%. And then we rally up, and then we finally get the death cross, right? So you remember, moving averages are they're lagging indicators, right? They tell you what's already happened. The fact that we're just now getting this death cross after a year of down, I mean, you shouldn't be so crazy thinking, oh my God, we have to definitely go down lower. I mean, we've been going down for a year, guys. We lost almost 80%. If this death cross happened up here at around 20 or 30%, okay, I'd say, okay, yeah, maybe we get some lower out of that, but we've already dropped almost 80% before that ever even happened. So, I don't consider it a good signal. There's just historically, golden crosses and death crosses aren't very consistent at all as far as price following through. We've talked about it before, why that often happens. What I'm talking about today is just another reason why. You're thinking, oh, God, it's a death cross. We have to go down lower. But you're not recognizing that we've already gone down for a year. It's 80% almost. Right? So, I mean, just things you have to kind of keep in mind with these things. I'm, again, not a big fan of the particular cross, meaning a whole lot of anything. Just in general, okay? Yeah, more retroactive analysis than a forecast. Yeah. Ahmet, you're still in your longs? Totally agree with me. Yeah, see, and that's the way it is, guys. See, this is what I'm talking about. This is the way trading should be. right? The idea is to understand, okay, I don't necessarily know what's going to happen. I think A may happen, but B could still happen. But even if it is B, we're still going in the same direction for a bit more at least. So why aren't you trading it? See, this is what I mean. If you've got people in your feed, right, big influencers, right, that have been talking about how price has to go lower all the way up here, and they're not longing along this way, just stop listening to them, because they haven't figured out how to get it correct yet. They haven't figured out what we're talking about right now, what Amit and I were just discussing right there, right? It's the idea that we think things may be happening one way or the other, but we can't confirm it yet, right? But in either case, price is still going to go in the same direction for a bit more. Even if you're bearish, guys, why would you give up? Look at this rally off the lows here. 57%, guys. Why would you give up 50%, 57% right there? Just holding on to shorts, right? In months, you're going months sideways here from what? November? So you got December, January coming up on 3 months, a week from now. Why? That makes no sense, right? Unless you're an investor and your time frame is years. But if you're a trader, if you're telling me you're a trader and you aren't longing any of this here, regardless if you think it has to come down ultimately or not, if you're not longing this, then I think you kind of need to kind of reassess if you're really a trader, right? Because traders, listen, guys, here's the deal. If you're a trader, you don't really care about the longer term trend. You don't care about the yearly trend or anything like that. I mean, you pay attention to it just as an idea of what may go on, but overall, you're still trading that shorter term time frame. You're still trading that shorter term volatility. All you care is that there's volatility. If you say you're a trader and you're upset that price is doing anything, that is going up or that it's going down, and you're upset about it, it means that you're not really thinking in terms of trading. You're thinking in terms of investing. And it's important that you recognize that, because it is that cognitive dissonance that's going to cause you to lose money. That's why I bring it up, guys. I'm not trying to make fun of anybody or hurt anybody's feelings, but listen, it's cognitive dissonance that happens, and that causes you to lose money because it's hard for you emotionally to commit and to stay committed if you've got that going on. If you say you're one thing, but you're looking at it another way, there's a lot of confusion. You'll get analysis paralysis, right? You won't be able to even enter trades often. Does that make sense, guys? Ahmed says, I think we're in a super cycle wave 4. That's why I'm leaning towards 4 to 5K, because it is the previous wave 4 territory. Yeah, you know, I'm thinking I was the guy that was talking super cycle as high as far as stocks and everything went for the last few years, kind of leading up to this, right? But we didn't get a blow off top, and we didn't get a blow off top here either. So that really makes me question, has that super cycle, that wave 3, terminated yet? I don't think it has. Remember, if you're thinking super cycle, then you should be thinking in terms of Elliott wave, right? And if you're thinking in terms of that, then you're thinking a fifth wave of a fifth wave of a fifth wave, right? Nested fifth waves. That's nested exuberance, right? The market should be out of its mind crazy about how price is going to continue higher, right? When you get to the top of that wave 3. But we didn't get that. We got a rollover, right? I mean, we got this kind of double top going on here. Stocks, we just got, November of 2021 was NASDAQ. January of 2021 was the Dow and the SPX, right? The S&P. And they just rolled over. That rejection, that rollover rejection, is not what we would expect to see with a super cycle top. And that's why I started, after saying all this and talking about it, so that's why as we were coming down, I was like, maybe not. Maybe we've still got one more push higher to get that blow off top, to get that excitement in that rally, right? And so that's kind of my thinking about it in terms of cycles and whatnot. Does that make sense? Let me see here. So yeah. Can you look at in linear scale so you can see the blow off top? No, I wouldn't look at linear scale. Why would you look at linear scale? It makes no sense. Listen, guys, here's the thing. If you've got this here, right? Okay. I've talked about this before. Why do we use log scale? Why don't we use linear scale when you have these, hundreds and thousands of percents of rally, right? We don't use it because when you enter a trade, you're looking to make a percentage return, not a dollar return, right? Here's what I mean. If you entered a long down here at $3,400 and you're looking to, you'd be looking to make like 10%, right? $340. If you enter a long down here at $29,500 or $30,000, right? You're still looking to make 10%, but that's $3,000 now, not $340 whatever dollars, right? And so what log scale does is it helps us visualize what we're thinking, how we're interpreting price action. That's what log scale does. Log scale just gives us a visual of what we're thinking, of how we're looking at price action. So when you look at linear, it's bastardized, right? It's not the way that we interpret when we think about price action as we're entering or exiting trades in there. We don't think in terms of linear, because you would have to think then $346 here and $346 here, but you're not thinking about $346 here. You're looking at percentage return. And percentage return, 10% here is, at 30,000 is 3,000. At 3,400, it's 340. So you have to look at the log on these large big moves here. Your linear doesn't do a whole lot to help that. Your linear doesn't look correct, right? It's not correct in the way that it looks for our expectations of when we enter price, when we enter a trade. Does that make sense? That's why we don't look at linear scale on these big moves like this, because it's going to give you a false view. And what I mean by a false view is it's going to give you a false interpretation of how you're thinking about your price action where you're at. So that's why we don't look at that. Again, there's the worst thing you can say about log is that it's almost exact to linear on the very short time frames. But linear on the larger time frames gives you a false view of what the chart looks like, right? Because of, like I said, we're looking to enter to make 10%, not to make $346, which is 10% at 3,400, right? Does that make sense, guys? That's why I won't sit here and look at linear charts, because they're not accurate for the way that our minds are looking at and thinking about price action at the level we're at. Hopefully it makes sense, guys. Let me see here. Don't even get you started on log scale fibs. Oh man, I know, right? It's kind of tough. Errol Quinn says, I know I've asked this before, but do you have any more data that tells you if we're seeing that super cycle in 2023? Warning, I'm going to ask that every few weeks. I appreciate the warning, man. Do I have any more data that tells if we're seeing that super cycle in 2023? Oh, you mean maybe just like a melt up, blow off top here in 2023 versus some multi-year rally? Actually, if we look in terms of stocks, I've posted a few things over the last few weeks. I'll have to go dig them out again. Some different things that we've looked at that may suggest that it could be a multi-year rally rather than just like a face melting kind of blow off top. So like it could be an extended fifth wave rally, overextended fifth wave rally. And so one of those things we would look at, right? I mean, just in terms of crypto is, okay, we think of Bitcoin in the halvings, right? And we don't get a new all-time high until after the halving, right? So we shouldn't expect to get a new all-time high until after, what is it, like sometime in March of next year, right? That's when the halving is. So at least until after the halving happens. So, I mean, if we look at historically what happens, and again, this is always prefaced with the warning that past performance is not indicative of future results, right? But Bitcoin has consistently done this year after year. So until it doesn't, we necessarily should kind of look at the idea that it probably will, right? Now we're going to sit here and continue watching stuff that happens along the way to see if maybe, things have changed. But we haven't seen anything like that happening yet. The only thing we have is a lot of people saying, oh, things are going to crash right now. But again, we've got this really robust jobs market at the moment, right? And how do we know? Because 3.4% unemployment, guys. I mean, it's crazy. That's low. That's like really, really low. Now, usually these things, if I pointed out before, usually lead to a recession, right? Because usually when you get down to this kind of 3.4, 3.6 level, that marks because the markets just can't seem to become completely 0% unemployment, right? Everybody's working. There's always that bit. So once you're pushing down into the mid to low 3%, that's usually indicative of a reset needing to be, where we start seeing jobs loss, right? But we're still doing this. Honestly, guys, I started talking about this, almost a year ago, and I would have expected to see it sooner, but instead now we're getting this push down lower. So when I think of this and I look at it, I go, okay, well, what's maybe going on here? It's possible because we're coming up, again, my idea is if we're at the top, it's the end of the credit cycle, right? All the credit gets reset now, right? Everything, that's it. So my thought then is, okay, so if we're not done yet, then all this information that's coming in, it's confusing people. It's making people all crazy, right? They expect something that's not happening, right? That could be the telltale sign that it is that final move up still to go. Because the market isn't doing what it normally would be expected to do when we've got all these indicators. We've got this huge inversion, of the yield curve and everything else going on. Things that normally would say, oh my God, we got to be worried. And yet here we go, keep churning, right? So, if you need a perspective as of why these things that look like they probably should be happening aren't happening, I mean, maybe you look at something like that, right? Let me see here. Okay, catch up with you guys. Yeah, the grand super cycle. Yeah. That's what I'm kind of looking at. Again, wave one would have been the rally up into 1929. Great Depression was wave two, right? The drop down to 3 years drop is wave two, right? And then, like I said, it took a quarter of a century. It was like 1954, 55 before we finally broke out above that 1929 swing high, right? So right now we're still looking at, again, what we saw in stocks is that little petered out move. Is that wave three? I don't think so. Again, it doesn't seem likely, right? Let's kind of look here real quick. Let's kind of pull this up. So I can show you here real quick, guys, right? See, again, the Dow was the first one to break out, the only one to break out right now above that mid-August swing high, right? Almost looks like we got a barrier triangle going on here. So looking for a pop out up toward that R1 pivot, right? Weekly R1. But let's jump out here to the monthly. This is the idea, right? See if we can get down here. So the idea basically is that this becomes 1, this becomes 2. And the last few years leading up to it, I was looking for this to be a 3, right? But the problem is, we just rolled over. And again, when you're at that point, when you're at that grand super cycle level, you're talking about fifth waves of fifth waves of fifth waves. There should have been a larger, more heated rally, a more kind of blow off top looking thing. We just got to rally. We just got to drop over here. So I think it's possible we could still have wave 3 in progress. And so maybe this becomes just, geez, I don't know. I don't have my count here real quick, but maybe, something like, well, there's, 1, 2 right there, right? So there's 1, potentially there's 2, right? And so we were looking at kind of like maybe this idea here, right? Maybe something, whoops. Let me go ahead and change all these up here. So if we're looking grand super cycle, right, boom. That's what we're looking at there with that bigger one. Here becomes the super cycle, right? Like this. And so then it goes, okay, well, what's going on here? And so this right here looks like a 4, right? This looks like A, B, C, D, E. What we call a megaphone pattern, right? It's just an inverted symmetrical triangle where your waves are getting deeper and deeper with each move, right? So what if, though, instead of this being this right here, right? So you'd have to say, okay, well, this is, going to be 2, 3, 4, 5. So we were looking at something like maybe this right here. Maybe 1, 2. You like this 1, 2, 3, 4, 5, right? Gives us 3, 4. Let me see here. Yeah, cycle. Yeah, okay. Whoops. And so right here, again, that's going to be your primary count in there. And then you go here. And so what we were looking at is this the idea that this is what was going on, right? This is what I've been talking about. Maybe we had this going on. You see? And so we'd have this nice big move down with wave 4. Well, the problem with that, and that would have taken us down here. Okay? This is your dot-com bubble, great financial crisis. It's just a flat correction, right? But this right here, right? What if this instead of 5, what if, there's a couple of different ways to look at this, but what if, and this is what the question was earlier, what I was being asked here. So what if this is something like 1, 2, see if we can do this here. 3, 4. And what if we get melt up wave 5, right? And we just get this this blowout top, right? But what if, my other thought is, that's the one, and this is the question that was being asked earlier where he said, I'm going to ask this every few weeks, right? This is what he's asking. Are we just going to get this blow off top wave 5? Or is this 1, 2 of a multi-year rally here to give us 5 up to continue higher there? And that's the question right now. And I don't know what the answer is just yet. But that's a 50% pullback off that swing low. That's a wave 2. Right? Yeah, don't fight the fibs, Corey says. I agree. So, we have to, this is what I'm talking about, guys. Trading isn't about guaranteeing and knowing for sure what's going to happen. It's about understanding enough in the way you're looking at it to say, okay, well, I think this maybe happened because of this, this, and this, but it's possible this other thing could be happening as well. And so the thing is, whether this would be 5 or this would be just wave 3 of 5 heading up, it doesn't matter in either case. In either case, you would be looking to head up higher. Rather than trying to short it all the way down, understand that you're going to ride up higher. And then as it gets toward that, that first kind of target that would say, okay, this is probably wave 5, what happens? Does it continue through it, suggesting maybe it's just that wave 3? Or is that it and that's done and that's 5 and we're coming down? And so again, if I'm looking at this, what I'm looking for is some sort of sharper blow off top coming out of that to signal that that's maybe like a 1, 2, 3, 4, 5 here for wave, for 5 of 5 of 5 kind of thing. Right? That's a great explanation. Okay, good. Yeah, so this is my main thing here, guys. And I'm going to tell you what right now, if this is, whatever's going on with here, you should expect with Bitcoin, right? You should expect that if we don't just get the blow off here, if we continue up, if this is a multi-year rally, you should expect Bitcoin to do the same. Right? And so you either don't buy at the lows, right? And then you regret it all the way up. Or you continue to short every time it goes up, right? And then you regret that all the way up, right? Instead of going here and going, okay, well, even if I think it has to go down, what's going to happen before that? Am I going to sit here and argue with it while it rallies 50%, 50+%? Am I going to try and short it continually as it's rallying there and lose money continually? But see, that's the difference, guys, between being a trader and, in just being somebody that just talks, right, online, right? Because if you're a trader, all you care about is the volatility, that local volatility. As long as you've got direction, that's all you want. I mean, you don't care what happens on the grander scheme of things. That's only for investors. And if you're an investor, well, then necessarily, why are you arguing anything on smaller time frames? If you're a multi-year investor, why are you even looking at the daily? You shouldn't. There's absolutely no reason. That's too short a time frame for you. Right? So there's a lot of change in the way that you think versus what you say that you believe that you are or that you're doing. Yeah, potentially a 5 around that 44.5 area. But again, I'm thinking that. So here's the way I'm looking at it. If this is like a 1, 2, 3, 4 here, right? Well, then based on wave 4 here, you've got a minimum expected target of 41,940 and a secondary target up there around that 44.5, 45 area. So I've kind of, I'm looking for a blow off top. So I would expect a blow off top to get above that. It could even go up here to 50,000, right? Overextension. But I think if you're getting to 50,000, unless it's going vertical like this at that point, I think you really got to look at it as being just 1, 2, 3, 4, and 5 still to go on that. And so we get kind of like that multi-year rally, right? But yeah, again, one of my big reasons I'm looking at the idea that we may not be topped out yet is because this should be a grand super cycle top. And yet we don't have a blow off on the top there. And that's generally what we should expect. So because we don't, it doesn't guarantee that it can't be that wave, this grand super cycle wave 3, right? It doesn't guarantee it, but in trading, you generally tend to go with what usually happens unless something different happens. And if you can do that, if you can understand that and then do that, you're going to find that you have a lot easier time trading, right? Now, here's the thing. Here's the thing, guys. Let's say, see, because you can look at this and go, okay, maybe this is 1, 2, and this is 1, 2, 3, 4, 5, 3, 4, 5, So what we're looking at, first of all, on the monthly, right, we've got this huge bullish engulfing candle, right, on the monthly. And now we got the breakout, impulsive breakout here above that weekly monthly pivot area, right? So my default, and we've pulled back and tested as support consistently here. My default is that we head higher. And if we're going to head higher, then we should break out above this swing high. So if we break out above that swing high, again, the idea is maybe this is, at least 3, 4, and 5 heading up here. And if it is, then I'm looking for that blow off top. You see how I'm doing this, guys? You see how I'm looking at what we normally expect? And if price action follows through, then we're going to keep that expectation. Again, if you don't understand why we would expect a blow off top, it's the idea, when you look at these waves, right? Here's the degrees, right? So these are the smallest degrees going to largest degrees, right? There's grand supercycle. So grand supercycle is the 5th wave, right? Of the 5th wave, of the 5th wave, of the 5th wave kind of idea, right? So you have a 5th wave inside a 5th wave, inside a 5th wave, inside a 5th wave. So excitement, building up in excitement, building up in excitement, building up in excitement, right? Euphoria. You would expect the market to just be sucked in with it. And that's what gives you that blow off top. If you're in crypto, you should understand that, right? Every time we get to the top of the cycle, usually, think 2017, right? Blow off top, stuff like that. But again, we just kind of rolled over. And so that leaves me thinking maybe we have that further up. Okay, guys? My long thought process and how I work through it is gold. Well, I'm glad you think so, man. Again, guys, here's the thing. I give you, if you're here and you don't recognize how much free education, like really significant education you guys are getting here, then you're not paying attention. Because my goal is, whether you join us or not, I would love for you to have with us. I think we have an absolutely amazing product. I know that I work my butt off to help you out. And to hopefully help you understand. Again, at the end of the day, I can only kind of lead you there. I can't force you to accept and then to practice what we're talking about, right? But, if you're going to come here anyway, even if you don't join us, I want to try and give you something. Because there's so much of that bad analysis online that looks legit, right? Because you don't know. because you don't know, right? Because you're new, because you haven't been trained properly, right? So you don't understand, but it sounds really legit. And the problem is that's going to get you hurt. So I'm going to come out here, I'm going to tell you, I'm going to give you a thought process, same thing I do in Discord. I don't just normally give out just targets, whatever. I sit there and I talk about it. I say, listen, this is what I'm thinking. This is why I would expect this. Historically, this is what this means. If you're trading pivots and this happens, then this is generally what we expect to happen next. So that way, you're not, everybody else just gives you a target. They're like, listen, it's going to do this. Or look, it looks like this pattern, so it's going to do this. But nobody gets in there from what I've seen and really explains to you why that matters. That's what I try and do, whether it's here or whether it's in Discord. So I appreciate, if you guys, are like that, you think it's great that I go through these, bit more explanations, is in depth. That's the goal. Because, most of y'all won't join us. And that's your thing, right? But even if you don't, I still want you to leave here better than when you came in, at least in understanding what's going on. Because it means there's less of a chance you're going to lose money that you don't have to lose. Right? Even though he likes Texas Tech, it's still good alpha. Man, I gave him enough money for my law degree, so yeah, I got to like him. Yeah, and it's not that, a lot of this is stuff that you're going to have to listen to multiple times, guys. It's like everything else. When you're changing the way you think about something, it takes many, many times hearing it. You don't just the first time you hear it go, oh yeah, oh my gosh. You usually have to, for most of us, we have to listen to it. We have to read it again and again and again before it finally clicks. Yeah, you rarely get anything the first time around, guys, especially when it's a strong change from the way that you normally think on something. Okay, guys? So yeah, but again, none of this I'm saying here guarantees that we have to get a new all-time high. See, that's the whole thing. I can sit here and tell you all this, but none of this actually guarantees that we have to. But if we do get a new all-time high, then this is the reasoning for it, right? This is the things that you should be looking for. The things that should make sense along the way, right? The things that you should notice, that you should pick up on, right? This is what happens when you become a student in the market for 27 years. Right? Well, okay. Wasn't the first 3 or 4 years, all right? You guys know my story. I had a lot of money lost back then. But, 20 plus years, right? That's what this is. This is the culmination of paying attention and listening and understanding. I had somebody ask recently on Twitter, they asked me, there's the meme that you have to blow up your account to learn, right? And they asked me, do I believe that's true? Guys, I really don't believe that's true. Most people, that's what they do, but I don't believe that you have to do it. But it all depends on you. How open are you to accepting that what you may think is not correct? That the way you may think you understand the world, the way you may think you understand the markets, the way you may think you understand economics, maybe is not correct. It sounds correct. There's a lot going on. You go, man, that sounds like, yeah, like it could be. But what if it's not? Most people have too much ego to accept that they could be wrong. And so they don't really listen. They just argue all the time. They argue. They don't listen. Because in their minds, they're so correct, right? Don't be that person. Even I'm not that person, guys. I'm always willing to listen and see if maybe there's something I'm missing. This is why I do this live. I could record a simple 10-minute video, guys, and just give it to you and that's it. But instead, I bring out live. I talk to you for an hour plus, and I discuss with you because you have, like I met earlier, you have a different way of looking at the market. And I can look at that and go, okay, yeah, I saw that, but here's what I'm thinking and why. Doesn't guarantee I'm right, but at least you understand that, I'm not just pulling something out of my rear end, right? Or maybe you put something on there, and this has happened before, where I looked and I go, well, shoot. I did see that, but I wasn't thinking that way. Or I didn't even really pay attention to that. That could change things. Again, do you want to be right or do you want to be profitable? I always choose wanting to be profitable, guys. And you should too, okay? That's why proper risk management is so important. Most important thing you guys will do daily as a trader, okay? Check yourself before you wreck yourself. Oh man, he said to my son when he was like 3-4 years old. Mark says his ego got destroyed in public accounting. Best thing ever. Yeah. It really is, guys. And again, like they're saying there in the chat, it's not just in trading, it's in life. We feel and I think so much of it today has to do with the fact that we put our thoughts out publicly in social media. And let's just face it, so many people in social media are just total douches, right? Total wads of wasted time, right? And so then we become scared to change our mind or to admit we were wrong. Why? Why do you care what some Yahoo that you don't know, that doesn't pay your bills, that has no bearing on your life at all? Why do you care what they think or what they say? Well, because we don't like people to say bad things about us. Well, no, we don't. It sucks. But this is where you need to work on your self-worth, right? I'm telling you guys, if you're not doing it yet and you have trouble with that confidence thing, not confidence in staying right, but just in confidence in letting go when you could be wrong, get a life coach. I'm telling you. You're like, oh yeah, that's so stupid. It's not, guys. I'm telling you. Why do you think the wealthiest people around, they have these people, they have these coaches, they have these mentors that they've had along the way and that they've gotten as they've gotten more and more wealthy? There's a reason for that. Why do you think I pay for 3 of them right now? Different areas of my business and life. Because I don't know everything, and sometimes I can use help and I can use a reset. Right? That's what it's all about. If you're fighting it all the time because you're worried about what some Yahoo online says, you need to get help. And I don't mean that to be disrespectful or rude, but I mean that to be like, listen, you really need to talk to somebody about it. Because if you can work through that, guys, listen, if you can work through that, everything in your life becomes infinitely better. I promise you. Not just trading, everything in life, your relationships, your satisfaction in life, you're reaching your goals. All these things become doable. Why do you think I talk about mindset all the time and emotions? Got to do it, guys, okay? Seriously. Texas West Life Coach is coming soon. Hey, you never know. I know somebody. She's pretty freaking amazing, guys. So yeah. I mean, I'm telling you guys, it's just sometimes, in life, we don't want to pay, right? We don't want to pay for somebody to help us, right? And I was that way when I was younger. I was. But I had somebody a few weeks back ask me on Twitter. They said, if you don't mind my asking, what was it like for you? Come up, whatever. And I said, well, paraphrasing here, you guys can check on my timeline, TX West Capital there on Twitter. But they asked about that. I said, listen, here's the thing. I said, I kind of did really crappy start out, and then I became a student of the markets. I started doing better. I said, but really my change came when I started hiring mentors, when I started paying people who could do what I wanted to do really well. And I started paying attention to them. The time it took me to get where I wanted to be became a lot shorter. The return on what I'm getting was huge. You can learn and do these things on your own. I mean, it's possible. A lot of people have trouble doing it on their own because they don't have that commitment and that follow through. They don't understand what they need to do, right? But you can. If you do get through that, you can do it, right? But I guarantee you it's going to cost you more. It's going to take longer. And I don't know. Life's too short, guys. That's the way I look at it. Life's too short. And so what did I do? I didn't, where I am right now today in terms of what I have was not given to me. I have blue collar family, guys. Nothing special about, the situation I came from, right? But, I had to make those decisions to change things in what I was doing. And so that's what I did. But that's where my trading life really changed. That's where I really had the push, right? I really started seeing the results a lot stronger, right? So yeah. So a lot to be said for it, guys. You know what? me see here. Give me 1 minute here, guys. I'm going to get you a link here. I'm going to be honest with you. Let's do this. This person right here. Seriously, guys. Get hooked up with that right there. You know, just follow them. See what they're saying. Talk to them. I believe they're giving like some kind of free kind of intro discussion to figure things out or whatever. But yeah, just absolutely fantastic at what they do. And so if you're looking for that, guys, if you're looking for that, I'm at the end of the day, guys, you always ask me, you ask me about trading systems, you ask me about these other things, but at the end of the day, what you're really asking me is, how do I move ahead from where I'm at? That's what you're asking me. And for many of y'all, talking to a life coach, it can just do absolute wonders. But you have to be willing to, like I said with trading, to open up, to be humble, to accept that maybe the way you think things are not the way they are. If everybody around you is negative, you're going to think negatively, guys. But there's more to life than just thinking positively. Okay? So, here we are with this, right? So let me see here. Where are we? There we are. We're trying to push up higher again here. Again, expectation. We're looking for a breakout above this hourly pivot. Wedge resistance here. Impulsive breakout. If we can get that, then we're looking for a breakout above wave B, which will add confidence to the count. And then we look for that target up here around the daily R1 pivot, and secondary target up there around 26.5 at the EQ of this structure, which is basically your R5 pivot on the hourly. The idea, again, my thought is we get up there, and if we get rejected there, we pull back to the daily pivot, kind of this area down here, and then we really break out higher again, okay? Now, my big thought on these charts, guys, on, you know, even Bitcoin and, you know, SPX and the Dow and all that, it's possible, again, breaking out above that mid-August swing high, it locks in 3 down, right? It's possible you can get 3 up and then 5 more down and get a flat going, right? To finish wave 4 before you do wave 5 up. It's possible ABC down is A, and you'll get ABC up is B, C, D, E, and you'll get a triangle. So, you know, again, we always talk about what's max pain. Well, right now, so far, max pain for the market has been not longing off that June or October low, November, October low, depending on what market you're looking at, right? That's been the max pain. Everybody's like, oh, we have to go lower, we have to go lower. No! Max pain is what's been happening since October and November in stocks and crypto. That's max pain. Because everybody is so sure it has to go down and they're not getting in, or they're shorting and getting stopped out constantly. This is max pain right now. This is what's happening. What could be worse pain? If this is a wave 4 and we build a triangle throughout the rest of the year into Q4. We're up, we're down. Because by the time you get up here, then people start jumping in. But then it comes back, right? And they'll be like, damn it, I lost money there. And so it comes back down lows, you know, here, and they'll go, okay, I want to go short. And then it goes back up again. And they get caught again because it's just building a triangle. A, B, C, D, E. And then it breaks out. And then they don't get right when it breaks out because they're scared they're going to get caught again, and then it takes off. See, you see how this could become one large consolidation? Or again, even just ABC down, ABC up, and then 5 more waves back down. Try to buy the breakout here. It rejects, comes back down. Try to buy the break it down here. Dips a little bit, and then right back up. And you get caught. And all of a sudden, you have this large trading range here that does something like this, right? And so, again, you get the idea that you've got this A, B, C down, and then you get like this A, B, C up, and then you get like a 1, 2, 3, 4, 5 as a spring maybe, and then you get the move out. So you try and long in this area, And maybe it does. Maybe it breaks up. You get a expanded flat, right? And you think you're great, and then it comes back against you, and you get out, and you get lost, right? You lose money. And it comes down here, and you try to short on the breakdown here. Oh, it's definitely got to go down now. Again, it wipes you out there, and it heads back up, right? Or again, the other idea being this kind of triangle, right? A, B, C, D, E, or something like this, right? And then up. Or heck, it could be a running triangle and it breaks out above here. And so it's 3 up and then 3 down, 3 up, 3 down, and then back up, right? So, I mean, there's ways this could fit out if it's a wave 4. If it's only a wave 2, though, you're not going to have a triangle. If it's wave 2 of 5, right? But you could have a big flat. You see? We're talking about max pain. What's going to be max pain for markets? Right now, it's been the rally over the last few months. That's max pain. Because everybody was looking for it to go lower, and it wouldn't. And all your big accounts out there telling you, short, short, short. Profit Blue, Il Capo, all them people, right? Short, biggest bull trap ever, blah, blah, blah. And they keep getting stopped out. If they were even trading. I'm not even believing that they're trading. But if they were, right? If you're listening to them, you're getting stopped out left and right. For months now, right? Everybody finally joins in up here, and then it comes on back down here or continues to print a triangle, right? These are the options we've got right now, guys, really. If we're looking for one more move higher, these are if it's a wave 4 on that pullback, if this is 3 and this is 4, well, this could be 4 as a flat or as a triangle, which means you still got wave 5 to play out, right? But this could take months and months and months, the rest of the year to play out, right? If this is wave 1 and wave 2 of wave 5, you can't have the triangle, but you can still have this flat. Or in either one of those cases, wave 4 or wave 2 could be done right here. But if you're looking at longer term, if that's all you're looking at, you're going to get scared out and wiped out multiple times. If you're trading in the shorter term on that volatility, whatever direction it's going, price is going, you're going to make money. It's when you start trying to trade that shorter term, thinking about this longer term, that where you usually get stopped out. Because you're not thinking in terms of stop losses and everything on the shorter time frame. You're looking at the shorter time frame to get an entry for your larger time frame. And that's where the issues come up with, right? A learning mindset is the most important aspect in every area of life. The moment when I think I've arrived in some area, I know I need to push myself past that. Crypto MTNS, yes. Thank you, exactly. I get up here and I talk kind of confidently about things, right? But at the end of the day, these things I talk about are valid until they aren't anymore. And I'm willing to accept that they may not be at some point. But what I know is to get where I started in life to where I am now, these things I tell you guys are the things that I've had to go through. And they're the things that have made me, have made me who I am, have brought me to this place that I am right now. So until they stop working, I'm going to keep talking about them because they have worked. They've done well. I've learned a lot. Especially one of these coaches that I have here that I've had since September of last year has really changed in depth a lot more of some areas I was not paying attention to. And that's had a huge influence on me and on my business and everything else. And so, you're never, if you think you're done learning, guys, you need to wake the heck up. The minute you stop learning is the minute you start falling behind. The world continues, society continues, life continues, whether you decide to participate or not. What do I mean by participate? Learning. Okay? Let me see here. Can I look at the Swiss yen 1 hour? I believe that wave 5 just finished off the Friday low. Like you told us that we can spot waves visually. I'd like to know if I'm right. Yeah, let's see here. I guess we'll just do this. What'd you say? Swiss yen? What do we got here? Did you talk about a time frame here? You said the 1 hour. Okay. Off the, where? Off the Friday low. Is this the Friday low here? Yeah, that's the Friday low. 1, 2. 1, 2. 1, 2 here. 2, 3, 4, 5. 2, 3, 4. 5, 3, 4, 1, 2, 3, 4. I think we've got a little bit higher to go at least. If I'm looking right here, it looks like 1, 2, 3, 4, 5. So 5 still having to maybe push out. Let me see here. 2, 1, 2, 3, 4, 5. Yeah, it looks like maybe 1, 2, 3, 4, 5 maybe. Yeah, I think we've probably still got higher to go on that to still finish out. Kind of zoom out here to the daily. Yeah, I mean this daily is nice here. You had this gap up, came down, large lower wick, small candle spread near the top, and then this large bullish engulfing, and now we got this finishing up here. Yeah, I mean, yeah, I think we probably got some higher up there to go on that. Is that the Friday low? Yeah. Two, three, four. Yeah, I mean, I would probably think we've got a rally at least toward 144.886. And look at where that takes you. It takes you right here to the previous resistance support area. You see this right here? 144.886, around that area. Look at where it takes you. That target right here, the resistance support right here. So yeah, at least there right now, I think. Fibbo, have a great day, man. Ape USD daily on Coinbase. Ape USD. Whoops. Ape USD on Coinbase. I have to get out of here in a minute, guys. Crypto MTS, appreciate you checking in. Thanks so much. Let me see here. Let's see, we got that. I mean, if I look at this, it looks like 1, 2, 3, 4, 1, 2, 3, 4, 5. So it looks like 1, 2 right here. Which would give us a 3 here and a 5 up at 5.6. Without overextending, it could overextend along the way. Where are we in terms of the daily? Let's see here. So daily, if we got 5 up there, can we get a pullback that stays on the daily there at the pivot area? Yeah. I mean, I would look at 5.632, potentially 5.896, and then look for it to pull back to the pivot area here. Rally up higher. If we can hit the 2.618, if that can give us 5 waves up, that'll give us a pullback, 50% pullback to the support here at the pivot. Resistance, support, resistance, support, right there above the pivot there. 50% kind of pulls you back there. So yeah, I would be looking for an impulsive breakout above the pivot, really above this kind of swing high here at 5.449. And, seeing that, I think there's a good chance we'll head up higher from that. Let me see. Yeah, see, if you look at it, you go 1, 2, 3, 4, 5. 1, 2, and then 1, 2, 3, 4, 5. So A, B, C potentially. So really you want to see a breakout above this high here at 6.279. If you can get that, minimally, should be looking for a target around 7.448. But yeah, again, to me, it looks like you've possibly got, well, let me see here. Leading diagonal coming off right there, definitely. See, it's 1618, so it could be a wave 3, right? But if it's a wave 3, we should get rejected right here at 38.2 or the 50, right? Which gets us right below wave 1 here, right? But if we're breaking up into wave 1, then things start looking interesting. So we really got to get above this swing high here at 6.279. But yeah, if we can do that, 1, 2, 3, 4, 5 is leading diagonal, could be A and then B. And then 1, 2, 3, 4, 5 is C. Of course, I haven't looked at any other count coming into this, but you know, again, if we can get that breakout there, we should be looking up there around 7.45 at least on that. So yeah. Again, potentially tweezer bottoms here. These are good candles. You might even get a bullish engulfing candle today, so I'd watch to see if you can get that. Again, you know, bullish engulfing is a pause potential reversal, right? So it could be a pause before further downside, but right now, potential reversal off that. But yeah, let's see if we can get that impulsive breakout above this area here, and that'll add credence to the idea that it bottoms in. And then we want to see a breakout above 6.279 here. And if you can get that, then you should definitely be looking at least up here around 7.45 almost. At least that. Make sense? God, I gotta go, guys. Let me see here. I'll look at this last one. Nat gas. Nat gas, man. I keep looking for nat gas to give it a reason to rally, and it's just not doing it yet. Oh my gosh, my brain shot here. What is the futures? It's NG, isn't it? Yeah, right here. All right. Whoops. I mean, we just got a bunch of sideways here. We've got the daily rallying up and overbought. We're sitting between the daily pivot and S1. I mean, my initial thought, this is consult. I mean, it looks like A, B, C, D, potentially E here as a triangle, right? And so if it is, based on the height, 2.144 looks like it might be the target. If we can break out above here, then we definitely need to see an impulsive breakout above the daily pivot. If we can do that, then that'll suggest this is the bottom here. Consolidation at the bottom before breaking out higher. But right now, I would, you know, my assumption is likely a triangle here. And looking for that further breakdown toward that S1 pivot area on the daily. And then I'd look for a rally up from that. Does that make sense? Eric Quinn, have a great day, man. So yeah, Dan, that's what I'm kind of thinking. You know, I was looking at this potential being a bottom here, but we've just done, you know, back here on the 3rd of February, but we've just continued to consolidate right now. And so that looks like, yeah, see, it all looks like 3 waves. A, B, C, A, B, C, A, B, oh, A, B, C, A, B, C, A, B, C maybe. But if we do, again, if we do get that breakout above this swing high here at 2.657, that very well may suggest that that this is potentially, you know, the bottom here and we're heading up. Otherwise, again, I think we do make that little bit lower drop before it finds a bottom, right? All right, guys, man, I appreciate you all joining so much. As always, remember, the only thing you control in the market is how much you lose. That's absolutely it. So please keep working on that risk management. We'd love to have you join us. Don't forget, you can get in Tier 3 for 1 month. No auto renew, no nothing. $19.99 instead of $200. 1 month only. We're getting done with that this week, so you might want to jump in. But you can do that there at howtotradetowin.com/T3. Or you can join our mentor program, howtotradetowin.com/LMT. Got them both there at the beginning of the video, all right? Martin, good to see you checking in, man. Hey, I appreciate it. The life lessons are what I really hope you guys are picking up here. Because without those that I'm telling you guys about, I wouldn't be where I am in terms of trading or life or anything. Okay? So I hope to God those are the most important things that you guys are picking up. You guys have a fantastic day. And hopefully if you're in Discord or if you join, I'll see you guys over there. If not, I'll be back on Friday, 11 a.m. Central Standard Time, okay? All right, y'all. Take care.